Welcome to the Commercial Real Estate Show, your source for insightful analysis and enlightening discussions. Hello, I'm Michael Bull. Thanks for being with us today. Well, today we're going to talk about the hospitality industry. We'll look and see how the market is performing and what to expect moving forward. Please welcome my guest, Mark Woodworth. He's with PKF Hospitality Research, a CBR company. Mark, thanks for being with us again in Studio One.
Yeah, Michael, thanks for giving me the opportunity. Good to be back.
Well, we appreciate you being here in Studio One in Atlanta. And, you know, the hotel industry has been doing well, hasn't it? How did it actually perform overall last year?
Last year was a terrific year, by just about any measure that one would want to take in terms of analyzing what actually happened. The good news is in one sense, demand was a huge surprise in terms of how much expansion we saw in 2014, which really helped operators begin to really move pricing. Average daily rates in the industry last year grew at a very stiff clip, well above the long-run average, and really have set the stage for this year and next to be two more really fun times in our business.
And where are those levels right now?
Overall, according to STR Inc., the national occupancy ended up at just about 64.5%. On a relative basis, that's about 3 points above the long-run average. So that's one of the ways that we think about. One of the things we think of is just how well the industry's actually doing. Mm-hmm. But that high occupancy level has resulted in greater levels of scarcity in more and more markets and across many more different property types. And with that greater scarcity has come better pricing power, and which enabled managers to increase rates across the industry at about 4.5% last year. And again, we think that'll be even stronger in 2015.
And that's a pretty big increase, isn't it, in 1 year?
It's a very significant increase. Again, more than 2 times the long-run average rate of growth that we've seen in the industry. And importantly, I don't really want to get too far into the weeds on this today, Michael, knowing you as I do, but in real terms, if we think about how low inflation was, that the real growth that we've seen in lodging revenues and critically lodging profits has been approaching all-time high record levels, and again, we think that's going to persist for at least another couple of years.
Yeah. Well, you know, our listeners are sophisticated. We don't go way deep in the weeds, right? But what are the average daily rates right now?
In terms of the national occupancy, according to STR, is $115. Mm-hmm. So of course that's an average number. There's much higher in some markets, much lower in others, but that's as high as it's ever been in nominal terms.
Wow, that's fantastic. And what about the different classes of hotels? Are all of them doing well, or are full service hotels doing better than others? Or?
Yeah, I think, Michael, if we were to replay the show from a couple of years ago, and the answer to that question was, boy, you know, the higher your price, the better you're doing. Mm-hmm. So luxury was doing great. Upscale hotels, upscale properties were doing very well. That now applies to virtually everybody. Not only just the high end, but the more moderately and lower priced hotels have really seen some very significant demand growth, and as a consequent, increase in pricing.
That's great. So what are a few of the factors that are impacting the hotel industry? Is it the increase in the job market? Is it the scarcity of new supply? What is making this market so robust?
I think it's on the demand side of the equation. We've continued to see, even with at best average economic growth, very strong gains in travel, and therefore people renting hotel rooms. What we know from studying past cycles that the two economic variables that really impact lodging the most are changes in employment and changes in real personal income levels. Real personal income levels across the country fully recovered 3 years ago. I'm sure you know, and you listen to the job reports as I do, you know, we've seen 6, 7, 8 months of very significant increases in total employment, and as a result, that's creating more demand for hotel rooms in the vast majority of markets around the country.
Yeah, well, that's good. What about the future, Mark? What should we expect moving forward? Is this growth going to continue?
Well, we do. I think one of the questions that I like to ask groups when I'm meeting with them is not only how do you feel about the economy today, but how do you think the economy is going to be a year from today? Mm-hmm. I can't say that it's unanimous that people think it'll be better a year from now than it is today, but certainly the view is pervasive that things will continue to get better. So, and you asked a second ago about about the supply side of the equation. So we fully expect demand to continue to increase. We've begun to see the level of new construction in lodging accelerate, and within that, there's certain markets that are experiencing very significant increases in the number of rooms. But overall, we're still well below on a national level the amount of supply growth that we normally would have seen in this point of the cycle.
And why is that? Is that because the increased cost of land and development today, or is it entitlement issues, or is it the higher construction cost, or some combination?
Yeah, no, you're exactly right. It's if we think about the key inputs to the development process, whether it's land, materials, construction labor, cost of capital, with the exception of maybe the last one, all of the earlier inputs that I listed have been going up. And another question I like to ask, in fact, David Marvin, who's coming up soon, has been a very active developer. I like to ask people like David, what's going up faster, market values or replacement costs? And in the vast majority of markets, very quickly the answer has been replacement costs. So fundamentally, it's helping the value of those that have capital already committed to lodging. But again, if you're in the business of creating something new, that continues to be a pretty hefty headwind, and again, the vast majority of markets.
Right, and that's some positive dynamics that must be impacting the velocity of sales volume too, as the investment market and the hotel industry really heated up.
Absolutely. Last year was a good year. We think that this year should be another very, very good. Still not back to where we were back in 06 and 07, where the activity was at pretty heady levels. But there's no question that the investment community continues to look at hotels as a great alternative investment, particularly when viewed on a risk-adjusted basis. So we think that we're going to continue to see strong levels of transaction activity in most markets around the country.
Well, that's interesting, because if you're telling us that the rental rates and occupancy is greater than it's ever been, and you would think that the positive outlook for the future, you'd think that investment market would have more velocity than it did in those even in the go-go years, because of is it a lack of supply, or just sellers like, you know what, things are getting so much better that I'm not going to sell? Or
well, there is a point of view which I get. I mean, fundamentally, it's been good for so long that one way to think about that is we've got to be that much closer to the bad times. So just, and in fact, that's a very common question that we get asked is, tell us when the good times are going to end and tell us what it'll look like. Yeah. Because the answer to that question, the last two cycles, is it was a very unattractive picture. We go back to the 01 period and the 08, 09 period. Hotels feel it very, very quickly and very, very severely. So those memories have not been forgotten. So that's as people think about hotels, that's obviously continues to be a concern. Well, yeah. The other thing, Michael, I would say that point out again, as you know, hotels it's an operating business. Yeah. That's an important part of the value equation. And one of the things that we've begun to see as unemployment levels have gone down, the availability of labor therefore becomes more difficult, and we're now starting to see slippage in some of the productivity numbers in hotels. So you're just not getting as much of a return on your payroll investment as we had been, and that's critical because payroll and related costs are anywhere from 45 to 48% of all the expenses needed to run a hotel. So that single largest category is now beginning to grow at a fairly high clip. So we're watching that closely as well.
Yeah. You can't forget, as far as commercial real estate goes, you've got a business you're running here, and you have people sleeping in your
you do
your business,
and hopefully eating and drinking as well.
That's right. And what about some sample cap rates, Mark? What are you seeing for cap rates in the hotel industry right now? Well,
the reality is I could give you the range of what I've seen, and it's so big it'd probably be pretty meaningless. Meaning you can I think the Waldorf Astoria traded a month or two ago and at a reported cap rate of below 2.
Nice.
So that's obviously an exception. I think that the way I like to think about cap rates is not so much what's the level of cap rate today, but really directionally, which way are we moving?
How they're trending. Yeah.
And there's no question that they are moving in a downward direction. And that's because the income growth that we've seen in hotels has been very, very attractive. There's a belief that that profit growth is going to be sustained for at least another 2, probably 3 years. Again, very, very high levels. The level of new construction remains low, so therefore the threat of somebody taking food off my plate is lower than what it has been. So these things have really come together to from a forecast perspective, tell us that cap rates are likely to continue to trail down over the next couple of years.
All right, well, stay with us. Mark Woodworth is going to stay with us. We'll have some other guests join us to talk about the hospitality market. This is the Commercial Real Estate Show. I'm Michael Bull. We'll be right back. The Commercial Real Estate Show is brought to you by Bull Realty Commercial Advisors, a great place to do business. Visit bullrealty.com. RealNex, a comprehensive and powerful suite of commercial real estate tools at an incredibly low price. Visit realnex.com. That's REALNEX. FIU, Florida International University. Earn your master's in real estate in as little as 10 months without interrupting your career. Visit FIUonline.com. Xceligent, the resource professionals use for commercial real estate information. Visit xceligent.com. That's XCELIGENT. Commercial Search, the source to market and source available properties for sale or lease. Visit commercialsearch.com. For more information on these great companies or for additional videos, podcasts, or articles, visit CREshow.com.